Our agenda for today is we will go through an overview. We will then process using the WIP Calculator. We will do WIP Revenue, and then review some common notices that you might receive during the WIP Revenue process. There are a few different types of WIP in PSA. The two most common are the standard WIP process and the completed job method with manual close. Today for our session, we are going to focus on the standard WIP process. For more information on the other types of WIP, you can send an email to support and they will create a ticket for you. Can-Am Systems understands that restoration contractors have unique needs which require accounting for expenses and income throughout the life of a job, instead of only one time when the job has been completed. Knowing whether a job is profitable before it is complete is a valuable component of every successful restoration company. PSA software is designed specifically to address this need. To get started, we will first review the general ledger and job type setup. The first step in processing WIP is making sure the general ledger accounts for revenue and cost of goods sold are set up. The first picture shows you the emergency revenue account is 4111. The second picture shows you the correlating cost of goods sold account is 5111. These accounts are important because when WIP is processed, PSA will place revenue and job costs in the assigned accounts based on the job type. Once the accounts are created, we can create our job type. The job info screen contains a lot of valuable information. One piece of that information is the revenue percent. This directly affects WIP processing. Your estimated revenue is also on this page. Today, we are going to review the job type setup. Job types are created in this screen. To access the job type, you click the pencil next to the job type dropdown. We will review this from top to bottom. The job description identifies what job type we are looking at. The last letters adds letters to the end of the job number to easily identify the job type. The revenue percent is what you expect to earn. Cost of goods sold section, or COGS section, is where the general ledger account are entered for WIP processing. You can see in the general ledger pictures that we have entered the accounts for emergency job type. Payroll clearing, overhead recovery, revenue overhead, and equipment cost recovery are typically the same accounts for each job type. Once the job type is set up, we can run WIP. All job costs recorded in PSA post to the WIP, or Work in Progress job account, which is an asset balance sheet account. All job sales invoices recorded in PSA post to the Deferred Revenue, which is also an asset balance sheet account. These accounts are commonly referred to as WIP accounts. During this demonstration, we'll be using the Active Job Listing WIP report. We will review before and after each WIP run to compare the differences and watch the calculations. This process is typically done for a group of jobs at once. However, today we are going to focus on one specific job so we can identify the changes as we move forward. The very first step before we calculate WIP is to make sure we are in balance against the general ledger accounts for deferred revenue and work in process. The blue boxes show you the numbers we are comparing We are comparing the totals of this active job listing WIP report to the general ledger balance. This report shows you that we are in balance. If we were not, we could do some research, such as rerunning this report with closed jobs only, or running an account validation report to research what is causing the out of balance. If you find that you are out of balance, please send an email to support, and we are happy to walk you through the steps. Today, we will be focusing on the highlighted job. Reviewing from left to right, we have the estimated revenue of $3,500. Our estimated cost comes from the work order screen. Our revenue is $0 because we do not have an invoice posted. Our WIP revenue is also $0 because we have not processed WIP yet. Same for deferred. Our general ledger costs, which is our actual cost, is $201.28. We have not processed WIP on this job yet, so there is 0 in WIP transfer, 0 open work orders. The expected costs based on the general ledger is $201, and then our WIP balance is $201.28. This WIP balance exists primarily because we have not processed WIP yet. The income statement for March 2022 does not show any revenue or cost of goods sold yet. This is before WIP Calculator is processed. The revenue and cost of goods sold accounts only appear after we run WIP. However, indirect expenses are visible on the income statement before we run WIP, as these are not job costed. WIP Calculator can be ran at any interval. This process calculates anticipated or earned revenue throughout the life of a job. The anticipated or recognized revenue portion of the WIP calculation entry will post to the revenue account as determined by the job type. After WIP Calculator is ran, it automatically creates a journal entry for each job that transfers all WIP job costs to the appropriate cost of goods sold account. Next, we are going to process WIP Calculator. We will enter the date for March 31st, 2022. Once the WIP Calculator is done processing, journal entries are created. As you can see, this journal entry is placing costs in the emergency cost of goods sold account and recognized revenue based on cost and margin in the revenue account. This correlates to the job type setup that we completed earlier. The active job report reflects the WIP run and the changes. After WIP is processed, as of 3/31 of 2022, the calculation for WIP is as follows. Costs divided by expected spend % equals recognized revenue. Another example of this is $201.28 divided by 1 minus 25% equals $268.37. Or another way to look at this is $201.28 divided by 75%, which is your expected spend, equals $268.37. This revenue is recognized on the income statement before the job is invoiced. Reviewing the income statement after we run the WIP calculator, we can see that the revenue and the costs are now present. This information matches the journal entry that was posted and also matches the active job report. Here we are once again comparing the totals of this report to the general ledger balance. As you can see, we are in balance yet again. Since we have processed WIP, our WIP balance column now shows 0. 0 for the report and 0 for the general ledger. Here is our WIP report after we have invoiced in the month of April. Reviewing from left to right once again, we have our estimated revenue. Estimated cost is 0 because there are no work orders entered. And now since we've invoiced our job, we have a $3,500 invoice. We have our previously recognized revenue. We have the deferred revenue. We also have general ledger costs, our previously recognized costs through the WIP transfer process, our expected cost, which is the WIP transfer plus the WIP balance, gives you expected. And then we have our WIP balance costs. Those costs have not yet been through the WIP calculator process. We now have more information on this report since an invoice was posted. The yellow box is the invoice amount. The blue box is the revenue that was recognized during previous WIP runs. The green box is the balance of the revenue that is remaining to be recognized. The calculation of deferred revenue is WIP revenue minus revenue equals deferred. I'll say that one more time. The calculation of deferred revenue is WIP revenue minus revenue equals deferred. This information will update after we run WIP for April. Right now, this report reads that based on the invoice of $3,500 and the previously recognized revenue of $268.37, we have $3,231.63 left to recognize as income or revenue. Once again, after running WIP Calculator, we can see that the process has recognized additional revenue and placed costs in the cost of goods sold, and also placed additional revenue in the revenue account. Now we can see on the income statement, after we ran the calculator for WIP for the month of April, we have the current period showing what we currently earned. We have the previous WIP runs and this WIP run totaling $2,572. We also have current costs and the total of current and previous costs. Here's the active job report showing the WIP calculator after April 30th. Again, in the yellow box, we have the invoice amount. We have the updated recognized revenue in the WIP revenue column, and we still have a balance of deferred revenue, which is what we have left to recognize, of $927.32. The reason there is still a balance is that this margin is set for 25%. The system is calculating revenue based on costs and estimated revenue percent. However, the actual margin is 45%. The balance of this revenue will be earned when we close the job. This leads us to our final step. WIP Revenue is directly below WIP Calculator. WIP Revenue is typically ran at month end to finalize WIP and close out completed jobs. PSA generates adjustment journal entries for any difference between calculated revenue to date and actual invoices issued to the customer. A journal entry is created to recognize the remaining balance of revenue based on previous WIP runs and the invoiced amount. As you can see in this journal entry, we have placed the revenue amount against the revenue account. Now our income statement reflects the earned revenue for the month of April and the revenue to date, which actually matches the invoice for the current year to date. Once we close the job using the WIP revenue process, the job is no longer on the report. This completes the standard WIP process. This was an example created in a training database. It is understood that sometimes there are things that could slow down or prevent the close process. It is important to understand what those are and how to prevent them. The WIP revenue screen does a great job in letting you know if you can't close a job and why. You may receive some pop-up notifications when attempting to select jobs to close. We will review some of those notifications and what they mean. Using work orders is a common practice among most PSA users. When you receive a notification stating that a work order is open, this could mean that you still need to process some payments for vendors, invoice the customer, or simply close a placeholder work order. If a purchase order is still open, this typically means that you still need to pay a vendor. Another notification is accounting balance. This means that there are future dated transactions. Future dated means entries that are dated after the date you are attempting to close a specific job. For example, if we have a job that we are trying to close for April 30th, 2022, but we have a cost dated in May, that is considered an accounting balance. The different types of transactions for accounting balance includes time cards, vouchers, invoices, credit card charges, job costed bank withdrawals, or WIP journal entries. If you get an accounting balance error or notification, that means you can't close the job until the month of the last cost. So if the last cost occurred in May, or the last invoice was in May, then you can close the job for the month of May. The unposted timecards notification means that the update job cost function has not been completed. Without processing the update job cost function, these costs are not being placed against the job. If these costs are not placed against the job, then the WIP process and the revenue recognition will not be as accurate. This notification provides you with some instructions on how to solve the error. Either you process or update job costs, or you can run a report called the exception report and choose the option to select records without a date. WIP Balance. A WIP balance means that you have not ran WIP on this job yet. So if you accidentally skip running WIP for the month of May, and you try to close a job for the month of May, it is going to let you know that you have a balance. That concludes our presentation for today. Please place any questions in the chat box. Just a reminder that if there are specific questions regarding your company's financials, it is recommended to have a one-on-one conversation to protect privacy. With that, I will review the chat box.